What in the hell is going on with the stock market right now? What in the hell will happen to inflation today? And what in the hell will the Reserve Bank do with interest rates? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, Paul, this is my what in the hell version of mad about money, but it is like a what in the hell situation. Stock market, what's going on?
Yeah, so we're going to happen a third down day in a row in Australia today. Another 2% by the looks of it.
Bad.
Although we're doing better than the US, that really should be pointed out, Peter.
yeah.
And I think that you were quoting earlier the stats, S&P 500 down about 8%, this month. Yeah. We're only down a bit over 1.5.
Yeah, maybe 1.7, but still, it's interesting, Paul. The Dow is only down 4. So the less tech heavy the index, the less the index is down.
Yeah, and it's been a total turnaround in the market. I mean, what the market wants is profitability, right? This is back to the old traditional metrics of PE ratios and tech stocks. Unless there's super high growth, really are going to get caned until they're profitable. Look, Microsoft reported quite well after the bell. Amazon not so good, but I mean they're okay. They're
mega tech stocks.
They're mega tech stocks, but anything else, particularly in the Australian market, continues to get caned. We saw EML yesterday get absolutely smashed on a. Look, not a good downgrade, but it wasn't a huge downgrade. I think the challenge there was the costs were growing faster than revenue, right? And that's the big issue a lot of the tech stocks have.
Do you think, Paul, there's question marks whether Bain is actually serious about buying EML? Because that was one of the stories why EML went up, wasn't it?
Look, I think there are a whole lot of things. You had a bit of insider selling the week before that you pointed out, which doesn't look good. It was only a small amount, but those things never help, particularly in front of a downgrade. So you've got to question the timing a little bit, right?
That's right. And the chairman saved himself a lot of money by selling before the sell-off, but he wasn't to know, I presume. Look, the bottom line to me, Paul, is people are wondering what's behind all this negativity. And I answer, well, the Ukraine war is not helping, but the China lockdown is getting worse rather than better. And I think it's escalated the fears that maybe a recession is out there to happen in 2023. And the bond market, which you're an expert on, the yields have come down. And ironically, that's why tech stocks actually do well for one day, and then they forget that. So, Paul, do you think it is like the recession fear is?
I think the recession fear is overdone. I mean, we've still got full employment in both Australia and the United States. So it's very hard to have a recession when we've got full employment, right? Yeah. We're not getting the lagging indicators like employment, being challenged. So, look, let's wait and see. I think this is sort of market nerves.
Short-term nerves.
And we're used to that, so we've just got to sort of hold your breath. There'll be a bit of a buying opportunity. I think today is probably not a bad one to look at, but you don't need to use all your firepower up. It's only less than a week ago, we were that close to an all-time high. Yeah. So the pullbacks are inevitable, and we just got to go with the flow here a little bit. Yeah,
I think the really important point to make is that the expectation was if Ukraine and China's problems dissipate over a 3-month period, we expected a pretty solid global rebound, and that's why the Fed was looking at lots of interest rate rises. Well, now that's all being wound back, and the fear then is, this could be a recession. But it's guesswork, we don't know, and I think we have to keep our fingers crossed that the kind of negativity we're seeing now is really overdone, as it is overdone on the high side, overdone on the low side. Let's go to the inflation story today, Paul. What are you expecting?
Well, look, I think it's probably going to be towards the higher side of the forecast, about 4.5%. Let's just get and see how that comes out. I mean, I think the interesting thing is not the number. I mean, obviously, everyone's looked at the trim number, the actual core number, to see what that really means. Does that push the Reserve Bank further? Look, I reckon it's time for Phil to show a bit of guts here, right? I mean, I can't understand this idea, we might increase rates, but we're not going to do it for 2 or 3 months. You either increase them or you don't, right? So he's being pushed around by the market, right? You got to say he's being made to look an absolute goose, right? It was only in October last year, right? The Reserve Bank said we're not going to increase until 2024 at the earliest. Now we're talking about May. Less 7 months to that date, the last RBA statement in October, and he may do it, in mid-2022. So, look, does he have some spine? I don't know which way he should go. Given that he hasn't wanted to do it, I'd hang on.
Yeah, me too.
But wait till June because that's what you sort of implied. But if he gets pushed around by a couple of economists saying it should be next week, well. Yeah, I don't understand the Reserve Bank.
And there's a bit of a pile, and so not just a couple, there's a lot of economists now saying they're going to move in June. Now, this is...
some are saying they're going to move to next week. That's the current view. So that's the call. Yeah. So let's see what the inflation number brings.
Because in many ways, if the recession story we talked about in our first story is right, even the Fed might be far more hesitant in raising by 0.5% if the recession fears are getting bigger and bigger and bigger. Sure, they've got the inflation issues to deal with, but I just think that if I was Phil Lowe, I'd wait to see the wages data next week as well, and if it's not too bad, I would actually just wait till August, but still we'll have to wait and see. On that subject then, Paul, interest rates. Where do you think the Reserve Bank's going to go with interest rates?
Well, higher, but look, I think
how high? Three rises in a year?
I don't know.
Or
I mean,
five?
look, I think they're probably going to be about 1% by the end of the year. I mean, my fear is they get bullied by the market, right? And the markets aren't always right, just as the central banks aren't right. And they've got to show a bit of fibre here, right? Either if they were that convinced October, as recently as November, that we saw a patient, and that word patient's just gone in the last month. Well, they can afford to be a bit patient, right? Yeah. But let's look. I think it needs to be orderly. They don't need to throw the economy into recession, and so that's what they've got to be careful about. I mean, I'm not sure a whole lot of interest rate rise is actually going to stamp out inflation, right? Inflation here has been caused by outbreaks it's a residue of the pandemic. It's a supply chain issue, right?
It's not really the demand kind of inflation that can be curtailed by rising interest rates. I think you're absolutely right. I did like the analysis by Tim Toohey, who was the former Goldman Sachs chief economist here in Australia. He's now with Yarra Capital. And he actually made the point that he thinks there'll be 3 interest rate rises. To me, that's a measured approach considering we have a strong economy. We haven't got supersonic inflation. America's over 8%. We're still under 4 until today.
Yeah, let's see what today brings, shall we?
Yeah. So the bottom line is, I think that there is, particularly with all this talk about recessions around, why would the Reserve Bank go mad on raising interest rates really quickly? So I think the jury's still out, but as far as I'm concerned, I think the Reserve Bank really can take its time before it becomes excessive on interest rate rises. I'm Peter Swetzer.
I'm Paul Rickard.
And we're mad about money.